Hello everyone, hope you are doing well. In this video, we will discuss the CoinEngineers site, which shows the CVD spot data you have requested frequently. And look, this site will be very useful for you, because there are so many tools and resources you can use on this site, and all of them are completely free. I also use this site frequently, especially I can have prior knowledge about short squeeze and long squeeze events and open trades. Why short squeeze? Let me briefly explain this as well. A short squeeze is as follows. The squeezing of shorts. That is, the price of something is rising, and as it rises, people are opening short positions. What happens as more shorts are opened? It fuels the market. As those shorts get squeezed, the price continues to rise, because it provides liquidity. The same goes for a long squeeze, friends. You know how we tell you not to go long on an asset that has dropped significantly? That's the situation here. Because if you try to go long on an asset that has dropped significantly, do you know what happens? You fuel the market. As it drops, you go long, and as you go long, it continues to drop. It leaks you. This site, CoinEngineers, provides you with these benefits. It allows you to see this data. Also, we definitely have no sponsorship, advertisement, or anything with CoinEngineers. We are doing this video completely for you, for free. Now let's move on to our site. Friends, first of all, we need to register on this site. After registering, we log in and we are greeted by a screen like this. Let's go into our Bitcoin chart. Look, we have entered. Now we are greeted by the price of Bitcoin. What charts do we need? There is a section called Indicators. You click on this. After clicking, you write aggregated CVD, spot here again, also star this. After clicking, it will come down like this, showing the taker buying liquidities from all exchanges, meaning Bitcoin trades and spot. After writing this, friends, we write aggregated funding rate in the same way. Let's add our funding rate like this. After that, friends, we come back here and add aggregated CV stablecoins. That's it, friends. It shows the amount of stablecoins entering the margin, that is, the futures section. Do you know what this provides us? It provides this. You can understand whether a rise is supported by spot or derived in this way. This is really amazing. Let's move this down like this. After seeing these charts, look from above and click on the triangle here. From here, we do save layouts. After saving the layout, you won't need to open this one by one each time. You will say, Load Layout. When you click on this, it will appear right in front of you. So, what are these useful for? The first chart you see is already the price of the Bitcoin pair. The second one shows the opened futures contracts. As this increases, people start opening futures contracts. Generally, the rise of this indicates that a movement is likely, suggesting that there could be a breakout in the direction where it is concentrated. What you see below shows how much of the opened positions are long and how much are short. As you can guess, green candles represent long positions, while red candles indicate short positions. I have already mentioned the aggregated CVD spot and the graph below it. These taker purchases from the spot are taker purchases from derivatives and stablecoins. Now we can interpret this as follows. If we combine all of this data, we can think of it this way. A small example. Transactions have started to open. Okay, the first one is in hand. So, in which direction are these transactions? As you can see, they are in the short direction. Shorts are increasing, 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 increasing. And then what happens, do you know? They suddenly push the price up. Why? To liquidate the shorts here and to force the shorts out. By the way, I want to say this as well. These charts and coin purchases work much more efficiently if we are in a bull market. If we are in a bear market, I emphasize this point. In a bull market, opening from here and having funding this way or that way will certainly have its working parts. But there is constant buying and you will see longs continuously. If you open shorts, you will be very upset. For this reason, pay more attention to these charts during bear markets and let it be just one of your confirmations. I definitely do not recommend entering a trade just by looking at this chart because, look here for example. There have been things that didn't work in a tiny area as well. Of course, these need to be discussed. Look at what happened here. While our open interest is increasing here, what have people entered? People have entered shorts. And what happened? They leaked them with a single candle here. You see that shorts are increasing, open interest is increasing, then it suddenly rises. Then they made such a move that it's very interesting. You will see now, investors start to go long. After going long, you see the operation over there, right? So here, with this spike, the wolves are liquidating both the shorts and the longs. Here, open interest is increasing significantly. It rises from billions to 940, and investors are saying short here. They are saying short as if there is no tomorrow. Then suddenly, there is a rise upwards. This is how the working principle of this site is. If you want to predict long squeezes and short squeezes, this is a site that can provide you with confirmation. But as I said, look, I warn you, don't enter trades just by looking at this. Secondly, what we can do is to open the aggregated CVD spot from the indicators and drag it onto our chart. What is it useful for here? Look friends, I will tell you a little something. Let me give you a little trick, a little cheat. I have said this every time. Actually, this aggregate CVD spot line intersects with the price one way or another. So you see these gaps, they have intersected somehow. And right now our CVD spot data is above the price. From here, you can even make this comment. For the price to intersect with this data, don't forget to look at the other conflict story. I want to emphasize that the price might enter a small correction to meet this. Of course, if you combine this with other confirmations, I can assure you that you will feel much more at ease. Some friends write that there is no such thing as the more confirmations, the more successful. No, friends, the more confirmations you have, the better. Your on-chain data, your derivative spot data, league levels, price action, let me say DXY, total market cap, top chart, total 2 entries. Look, combining all of these will make a trade you take much safer for you. Trust me. This is the advice I can give you. For now, this is what I wanted to share with you regarding the coin list, friends. No one gives this much detail for free, rest assured. As I mentioned at the beginning, we have no sponsorship with these sites. We are only making these videos to add something for you. You can find links below where you can both support me and trade futures at a discounted rate. You can register for both TradingView and Binance through these links. That's all from me for now. See you in our next video. Take care.